Okay, great. Well, good morning, good afternoon, and good evening, ladies and gentlemen. And thank you very much for participating. It's indeed a pleasure to see that you were able to join us today. I will be giving you an update on the Global Airline Partnership Program that we've been working on now for some time. And today you have an overview of it. We'll then talk about basically today's realities and then an overview of the world economy post COVID-19 and the expectations of various predictors. Then give you an overview of the airlines that we are starting our discussions with and who we may kick off the program with today, and also those that we're still considering. We will then give you a view of our members' performance with Turkish Airline, who will be our kickoff partner, and then a sample of their network. We'll then close with an overview of NAP. Okay. Now, for the first time in history, the air cargo industry overshadowed the passenger business during this COVID-19 pandemic. And air cargo made it happen, just like Ayata has said. So, ladies and gentlemen, congratulations to all of you. We are now being recognized by the CEOs of the airlines as a vital part of our industry. We have stopped being the poor second cousins of the passenger business, at least for as long as the passenger aircraft are grounded. But we now have to start looking at the post-COVID-19 area. Now, our team in the industry have been very innovative with the passenger freighters during this pandemic. That has been critical to the movement of critical medical equipment and medical supplies. So, ladies and gentlemen, congratulations to us. We made it happen. And we're making the airlines that are flying today survive. Now, in terms of an overview of the program itself, it allows airlines to offer forwarder partners who in turn will commit to cargo volumes and revenues in a pre-agreed format on either on a per flight, per route, per region, or a per schedule period. Now, both parties will agree to incentive fees and flown tonnage and revenue targets in advance, with settlement frequencies also pre-agreed upon. The incentive fees will not be paid if the revenue targets are not met. Now, some airlines base their revenue targets on all-in gross revenues, whilst others are on a net revenue basis, which is defined as gross revenues less all applicable commissions, surcharges, incidental revenues, and all applicable interline costs. Now, SME forwarders and consolidators represent over 45% of the global air freight volume business. And the post-COVID-19 era represents a very huge opportunity for carriers to attract new global clients. Now, prior to COVID-19, the Asia Pacific region represented a major portion of the trade flows within Asia Pacific to North America, Asia Pacific to Europe, Middle East to Asia Pacific, Europe to Asia Pacific, and North America to Asia Pacific. And they represent about 38% of the total worldwide trade. The region is also currently leading the capacity return on the passenger side as well. So it is a critical region for us on the air cargo side. Now, whilst airlines, though, have global key account programs for global forwarders, pursuing a global partnership program with selected key partner airlines will be of immense value to our neutral air partner members. And our program is planned to include various partnership options that is designed to fit the needs of the partners. Things like preferred carrier status, a marketing and PR communications collaboration, global or regional BSA or CPA agreements, charter deals, special cargoes, and target and volume incentives on either a regional or global basis. Now, in terms of today's realities, IATA has said our industry is in a crisis. And the forecast is that the industry will be losing about $118 billion today, with passenger demand down by 61% versus 2019. Now, the current near-term traffic outlook on the passenger side remains a little bit iffy, despite the progress that has been made with vaccines availability. Now, initially, there were hopes when the COVID-19 vaccine was being developed that passenger traffic would actually feature very high and the economy would also recover quickly. Now, this positive sentiment has unfortunately not matured because of travelers' behavior, because flights and travel and the bookings have not matured up to the Q4 2020 level. And passenger traffic is limited by a lot of factors. People being afraid of catching COVID-19 during travel, restrictions in terms of quarantine when you arrive at your destination, and also when you arrive back at home. This is going on worldwide. And today, a lot of countries have lockdowns that have prevented, and even for those countries that have lockdowns, some of them also have curfews that are also preventing people from moving around. So the situation is still dire the way we know it today, okay? Now, when we look at the joint production aircraft, and that's the passenger aircraft, and the freighter capacity growth, you will see on the chart here that April saw the most decline in passenger capacity, which was at 80%. And the passenger freighters and freighter capacity started to increase at a 30% level as well. Now, by November, the passenger aircraft belly capacity was down to minus 55%, and the freighters is at 20% and still growing. So basically, passenger freighters and freighter capacity has saved the movement of cargo throughout the world. Now, most passenger aircraft are still grounded. And about the projection is that there'll be a reduction of almost 60% in passenger volumes compared to the pre-COVID-19 period. And today, most passenger aircraft are operating with very few passengers. So, cargo is playing a major role in making sure that those aircraft that are operating today with very few passengers are actually profitable. And it is amazing what cargo has done to the bottom line of a lot of airlines during this difficult period. Now, as passenger aircraft slowly takes back to the air, our collaboration with participating airlines will enable our members to benefit through our global support, tonnage commitment, flexible approach in creating opportunities when the industry goes back to a normal. Now, it is widely anticipated that back to normal could be anywhere between 2023 and 2025. Although, like Crystal said a few minutes ago, we are hoping that would happen faster towards the end of this year. But when this was put together, IATA had predicted a 2024 timeline. And the main goal of our global airline partnership program is to meet and assist our airlines that we work with to meet the profitability of the flights that are being operated today in light of the difficulties. Okay. Now, how long then, let's talk about how long it will take in terms of the forecast out there for the market to get back to normal. Industry members from the aircraft manufacturers to the airlines were interviewed, and they had different opinions at that time. And the thinking was that 4 out of the 10 that were interviewed thought that a 2023 recovery was possible, and 3 of them picked 2024. Now, 3 of the 10 picked 2025, and 1 predicted 2024 at the best and 2028 at the worst. So no matter how long this takes, whether it's 2021, late this year, or 2023 or 2024, cargo will continue to play a key role in filling the bellies of the beast to ensure that the airlines are profitable during this period. Now, in terms of the macroeconomies, you will see that the world has been classified into different categories here. On the map, you will see countries are classified as low risk, medium risk, sensitive risk, and high risk. And basically, the thinking is that airports in the low and sensitive risk countries will most probably be the target for most airlines to consider flying to as skies open up. Now, we will be monitoring the ramping up of the airline schedules, and those airlines that we're targeting, we will communicate their schedules to you as soon as they are released. But it is amazing to see that, there are 78 countries in the high risk level and 51 countries in the low risk level. So when you combine the low risk and the high risk and the sensitive risk, you will see that 67 countries will be the ones that most airlines will be targeting. Okay. In terms of the pre-COVID-19 GDP comparison, on the left-hand side, the chart indicates that in 2019, for example, the USA was number 1 in terms of GDP, with China at number 2, Japan number 3, Germany number 4, and India number 5. Now, when you go to the right-hand side, you would see that by 2030, it is predicted that China would become number 1, with India as number 2, the USA number 3, Indonesia number 4, Turkey number 5. A major change. Now, let's hope that the economy bounces back much faster. We expect that if the forecast as it is, say for 2024 or 2023 or 2021, it may not affect this forecast in 2030 because things will still continue in the business world as well, and cargo and trade would continue to move on. Now, when we look at the comparison of the countries in the top 10, you will see here on the chart that 5 of the 10 top GDP countries by 2030 will be based in Asia. So we are recommending that we seek airline partners that fly to and from Chinese airports as a starter, and then other Asian airports, and then other members of the top 10 GDP countries, because the trade movements will be between these top 10 countries in terms of the major portion of the trade moving around the world. Okay? And if we look at the forecast for the recovery, it is forecasted in 4 different shapes: the L-shape recovery, U-shape, W-shape, and the V-shape, where the L-shape is a sharp economic decline initially, then followed by a slow recovery. The U-shape is where the economy stagnates for a few quarters, so let's say up to 2 years, and then experiences a very healthy rise back to its previous peak. The W shape is one that is a tempting promise of recovery, but then it dips right back into a sharp decline, and then finally enters into full recovery for up to a 2-year period. And the V shape is one where the economy declines rapidly, and then is followed by a quick recovery again to its previous peak. So the question is, what are we hoping this pandemic would come out of? Are we hoping for the L, the U, the W, or the V? Right? Now, there was a survey done of the think tank conference board. And basically, the consensus, which is 42% here, they think that we're looking at a U-shaped recovery. And 32% thinks an L-shaped recovery. And personally, I'm thankful for that, because the worst one that can happen is the W-shaped recovery. which is at 16%. And then if you look at the various regions, you will see that the forecast varies. With China, the U shape is at 43%, L shape at 25%, which mirrors the global recovery levels that they're thinking about. So let's hope that we all get the L shape, which will be this year, towards the end of the year, or at best, the U shape. Okay. Now, which airlines are we talking to? Here are the airlines that we've talked to so far, and we are in the final stages of discussions with them, with Turkish Cargo being at the #1 stage, followed by Ethiopian Cargo, and then Cargo Airlines. We've also had a chat with Atlas Air, Astral Aviation, and Air Canada Cargo. And I believe tomorrow, Turkish Cargo will be making a presentation to us on their network and on our program as well. We are also looking at these airlines. So please let us know if you have any other recommendations that you think we should pursue. But these are the ones that we've identified to pursue as we go along and expand the program in 2021. Now, the benefits of being a key account airline manager, airline program. The first one, of course, is the incentives from the agreement. Okay, we get annual payments for meeting our goals. But please bear in mind, if we do not meet those goals, we don't get the incentives. We also enjoy a steady and fast flow of information, with monthly performance reports and schedules updated fast and quickly to us during the pandemic. We also have dedicated specialists that will help us to resolve issues fast and enhance communications. And we would have access to our airline's product for flexibility and development. And last but not the least, we would have access to prioritized troubleshooting. Okay. Now, let's look at some of the performance in the various regions. When we look at the performance except Turkey in our system, you will see that in terms of tonnage, in the first quarter of 2020, we enjoyed a 24% growth. In the second quarter, it was 18% growth. And in the third quarter, it dropped to 8%. And up until October, we're looking at a total of 14% growth, tonnage-wise. Now, when you look at revenues, it's a different story or different ball game. In the first quarter, we experienced a revenue increase of 57% or $5.5 million. By the second quarter, 291%, $18 million. Now, as you will realize, that was as a result of the capacity shortage that drove prices up and rates up throughout the world. And then in the third quarter, revenues went up by 135% or $11.5 million. And by the end of October, we had 160% at $18.7 million. And I think the forecast is will probably be at $20 million by the time that the year is over. We don't have the numbers yet. So even though it's been tough throughout the year, our members have done very well, okay, for all revenues into Turkey. I mean, for around the world except Turkey. Now, if we then look at the year-to-date performance by region in terms of, again, kilos, you would see that the largest region by far is the Far East, a whopping 63% of the market, followed by the Western and Southern Europe at 16%. The other regions are very close together to each other, 7, 8, 6, and 4%. Now, when we look at the revenue side, the same picture emerges, except the numbers are now higher, with the Far East representing 80%, and Western and Southern Europe is at 7%, and all other regions are about 3%, right? So you see the strength here that the Far East have, both in terms of revenues and in terms of tonnage. Okay. Now, when we start to just take a quick look at the top increasing and decreasing origins, you will see that in terms of the increasing origins, the only commonality here is China. When you look at it in terms of tonnage, you will see that all the countries here are different when you look at it in terms of revenues. No commonality after China. China is the top in terms of tonnage, and then the top in terms of revenues. And all the other countries just go back and forth. Now, when we look at this in terms of decreasing, you will see some commonality here. The United States, United Arab Emirates, Romania, and a few others are common in terms of the decrease in traffic in both areas. Okay. So we have 8 countries here. 6 of these 8 are also here in terms of revenues. Okay. So it is difficult to see how tough it's been for cargo traffic movement by countries when you compare them in terms of tonnage and in terms of revenues. Okay. In terms of our members' performance, when we look at just traffic into Turkey, the number 1 member is PIF Global Logistics in China. Number 2 is Action Air Logistics. Number 3, Sinotech. Number 4, TCI. And number 5, Beijing Harmony. So congratulations. And you would see that both PIF Global and Action Air Logistics had each a plus 60% growth in their revenues. So I'd like to extend congratulations to these members for a job well done. And we hope that we'll have more members in this top level as we go along with the program. So well done and congratulations. Now, here is the network of Turkish cargo. And they provide this to us as the schedule changes. And you will see here that as of the 9th of January was the last time they gave us an update. And the update they gave us shows the countries they're operating from, the destinations that they fly to, the flight type, whether it's a passenger freighter or it's a cargo aircraft or freighter, the day of week that they operate, a number of frequencies by day of week, and the weekly tonnage. Eventually, we'll be asking you to provide us with input on the number of NAP members that we have in each of these destinations and any comments you may have, and possibly the revenues that you can contribute to these destinations. Now, there are schedules on a regional basis, like I said before, and the regions are broken out by Far East, Middle East and South Asia, Africa, West South Europe, Northeast Europe, South and North America. And the updates will be made available to our members as soon as they're all available. So currently, in terms of the Far East, they serve 23 destinations in 17 countries. And in terms of West South Europe, they serve 15 destinations in 8 countries. And those two are the largest regions that we contribute revenues to. Okay. So on an overall basis, you will see that they serve 93 countries in 138 destinations as of the 9th of January this year. And past history tells us that this trend is increasing as time goes on. And you will get the information as soon as they release them to us. Okay, that's it. And Christoph, can I turn things over to you now again?
Yes, absolutely. Thank you so much, Sam. Thank you for the great presentation and with all the updates on our airline partner program. So you can keep the presentation, Sam. You can keep it.
Ah, okay.
Keep it on. Yes.
Okay, hang on. Ooh. What happened here now? I have lost.
I can upload as well. Don't worry. If you.
Okay, I can. I don't even have the.
No worries, no worries. I can do that myself.
Oh, hang on. Okay, yeah, I have it now. Okay. Okay. There it is.
Thank you, Sam. Okay. So why NAP? That is a very important question, and that's the first thing where the airlines are asking us. I mean, who are you? Why NAP? Why should we make a contract or an agreement with you guys while we can do with the Kunenagel, with the DHL, and so on? So basically, what we tell them is we consolidate local air freight heroes around the world. So our buying power combined is we are almost at least in the top 20. Around the world. I mean, if you look at the Turkish cargo results, we're talking about $40–50 million as a group a year. So taking that as an average, thinking about first-class carriers, we are a group spending between $40 and $60 million a year at least on first-class carriers. So that brings us to a level, consolidating our local heroes in a very, very strong position. So that is the one thing. Why NAP? We cover 150 countries, 300 local air freight heroes. Flexibility, very important. We are smaller companies than the big boys, and we're flexible to make short or long-term commitments with carriers. I mean, if you look at the COVID period now, for a big multinational to decide or somebody to sign for a block space, short or long-term, it will take a while. We are much more flexible. Our companies are much more flexible. to make a BSA short or long term or a commitment. And then compliance and know-how. It is very important that we go back and we say that our members that are complied, they're all complied with the proper accreditations, with the digital transformation and various requirements as dictated by various authorities worldwide. Sam, can we have the next one, please? So another reason why we're so strong is we have different type of members. So we don't have only the general air freight IATA forwarders that they have XYZ revenue. I mean, we do have some very strong neutral consolidators, some master loaders in Asia, particularly that they have some very strong BSAs commitment generating big revenues. Then we have also high yield because we have time critical logistics experts for special cargos, which is higher yield, and that is what the airlines are looking for as well. They're not that interested in general cargo. They're looking for special cargos with higher yield. And so we have a lot of airline brokers, express and courier, e-commerce, so that it creates a more advantage for us. The next one, please. So looking at our performance, so in North Asia, we're by far top 10 cargo sales, not to mention top 5. I mean, if you take our members combined, some of our members are top 1 in their own region, IATA, by far in tonnage and revenue. So if you take that combined, I put top 10 just to be on the right side, but we might be also top 5 cargo sales in North Asia as far as air export concerns. And top 20 in India subcontinent, we're very strong. Top 20 Africa and Middle East, top 20 in Southeast Asia, top 30 in Europe. I mean, only 2 of our members, I'm saying only 2 out of all European Union that are within top 30. So we can even much be bigger out of it. And then we're also very, very strong. We have individual strong members with good revenue and high yields on automotive and aerospace business, which is something that the airlines are looking for. So that is something really important. Now, what we do, and as we said, we're flexible, we sign regional BSA and CPA contracts for the airlines. And we're flexible to do that in a short period of time. We can assist the airline in sectors where they require additional uplift. We have the technology, we have our e-promos, we have all our tools, our mobile apps, anything the airline needs, we can assist instantly to get space based on a target rate, to commit to fill up the aircraft or the additional flight that the airlines is requiring freight. And we can offer instant rate and capacity promos to our members, and we can generate also revenue through charters, time criticals, and special cargos. And that is much better than a general cargo. That is what the airlines need. So as Sam mentioned before, we go to the airlines and we're offering a different type of partnership options. I mean, we don't push them for a global VID or a specific regional BSA and so on. We offer them options, and based on the airline and their culture and how they want to do business, they can choose that we either get a preferred, we offer them a preferred carrier status, that they're a preferred carrier within our network. Then we discuss global or regional BSA and CPA agreements. You might have airlines that are not interested in a global volume incentive, but they're interesting for our members to commit and sign short or long-term BSAs. You have other airlines that they're only looking at the general global volume incentive agreement based on a target, based on our previous year revenue and tonnage. And then, of course, we open that with charter deals and time critical and special cargo support. Ending marketing, PR, and communication collaboration. It is very important. It doesn't sound like a big benefit, but it is very important for the airline and for NAP as well. So that is pretty much, I mean, we have already speaking with, we have 5 airlines to kick off at the moment. We have to take it slow. We have to go one by one. We have to finalize one by one the airlines. I know there are a lot of recommendations, and we start getting some attention now in the market. We do have airlines also coming to us. We want to go step by step. Turkish cargo is our first priority. We haven't signed yet, but we're getting there. And tomorrow there will be also a presentation of Turkish cargo. And it proves with the number we get that we're really strong. I mean, we are one of the top 20 clients of every airline. You know, if we're having like 40 and 50 and 60 million dollars a year revenue, that is something incredible. Honestly, I didn't expect that we're that strong. And well done to you guys, to the members. You kept us, you kept the NAP flag up in the air. We do have. We feel very important when we speak with the airline and when we look at the airline and when they check our data, they're also very surprised. And thanks to you, we feel we're going to create something very big over here, but it will take some time. It will not happen overnight, but we're very, very confident and very optimistic. And I would like to thank you for that. So that's it. Thank you from me and Sam. Unfortunately, we are running out of time. We won't have time for Q&A at this really moment, but please feel free to email us or please feel free to participate on the closing on Thursday, where we're going to have so much time afterwards to answer all the questions and have a bit of an interaction with the members. So thank you so much. I know we're 18 minutes late. Some of the members already having one-to-one, so they left, but everything will be recorded and we will share all of these presentations. And now I give the stage back to Muriel. Thank you so much.
Thank you, Christos and Sam, and of course all the team and everyone attending the first NAP on air presentation. Christos said it all. Just a short note about what's coming next. Tomorrow, Wednesday at 8 a.m. GMT, TIACA orientation webinar with Mr. Kenneth Gibson, presenting NAP and TIACA strategic partnership, benefits for the members, and outlining TIACA's mission and objectives. Later in the same day at 1:30 GMT, Turkish Cargo and Mrs. Gülsin Gülkilik, I'm not good with this, will give us a general introduction and update on their new cargo products and services, investments, sales strategies, and global partnering opportunities with NAP. And the agenda for the day will close with our platinum sponsors, Genel Transport Turkey with Mr. Turgut Erkeskin, and Global Link China Logistics Group with Mr. Solomon Kai, presenting their companies from 2 to 3 p.m. GMT. So the presentation is over. Thank you for your time and see you tomorrow. Good luck with your meetings from now on. Thank you so much. Goodbye, everybody.
Thank you all. Thank you so much for joining. All the best. See you tomorrow.
Thank you so much. Bye-bye.